So hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. The GIFT Nifty hinting at a subdued start, but given the fact that it is above that 21,000 marks, looks like we are poised to clock that level for the first time ever. Lots of stocks in focus today. Negative news flow around Paytm. Of course, sugar stocks will also be in focus. We'll be talking about that. And we'll also be getting you, all the action on what's happening in the global markets, what's happening with the Bank Nifty, and all the other stocks that will be making headlines in today's session. But of course, you'll also be getting all your stock-related queries answered by a technical expert on the show. So if you have any queries, as usual, send them in to us on our YouTube feed, and we'll try and take them up. But before we move any further, let's take a look at the top headlines at this hour. Wall Street ends lower for a third straight day amid a volatile session. 10-year Treasury yields slide to September lows amid a cool-off in the labour market. Meanwhile, Asian markets open largely lower on the back of a weak handover from Wall Street. The GIFT Nifty, however, is indicating a start above that 21,000 mark. Crude slides for a fifth straight day with WTI falling below that $70 per barrel mark. In fact, Brent is trading below $75 as prices continue to fall despite the OPEC's production cuts. Meanwhile, gold has consolidated around that $2,050 an ounce mark as investors await clues on the Fed's rate cut timeline going forward. Among stocks in focus today, watch out for IDFC First Bank as Warburg Pincus is likely to offload 1.3% stake via block deal. Meanwhile, IRCON will also be in focus as government plans to sell 8% via OFS. Also in focus, as I mentioned, will be Paytm. So we will be talking about these particular stocks on the show today. But let me first bring on board our technical expert for today. Joining me is Hemen Kapadia, who is the Senior VP Institutional Equity at the Choksey Securities. Great to have you on the show, Hemen, as always. But looking at the screen, 21,000 is almost here, and Nifty Bank has also started participating. That's some bit of good news coming in. But yesterday we saw some bit of cool off, given the fact that we had the weekly expiry on the Nifty Bank, right? So going forward, do you think 21,000 is a given at open? And for Bank Nifty, do you think it is set to resume its uptrend?
A very good one, Nandita. Thank you for having me on the show. It's such a pleasure. You've absolutely nailed it, because Bank Nifty has finally started participating, and it's got a lot of catching up to do. It did finally catch up, and up till now it was Nifty who was sort of making a new all-time high. Bank Nifty finally participated. Having said that, one should not doubt or be cautious about good times, but one gets the feeling that the move has been too fast. And one thing which is, I wouldn't say disconcerting, but a slight point to ponder is we've had a runaway move, Nifty, Bank Nifty both. Now the VIX, which used to be sub 11, is 13.74. I am not quite sure how to read that. The VIX should, if the indices move like this, I think the VIX should be more subdued than what it is. Now there are no event risks, Nandita. The Federal Reserve meeting, but that's maybe a week or 10 days away, and the elections are out. So don't see any apparent triggers in terms of events which justify higher VIX. Multiple gaps as far as the Nifty and Bank Nifty are concerned. Yesterday, the Bank Nifty is given a downward key reversal. It's still a buy on declines, Nandita, but I wouldn't mind saying that there could be a small period of consolidation. I'm not saying a very big thing, and a couple of these gaps might get covered, or at least there will be an attempt to cover up these gaps. So I'd say just avoid the Nifty, Bank Nifty a wee bit. Stock specific, there's a lot of movements happening, and the markets could just sort of cool off before it begin the next round of its move. Nandita.
All right, that's the view then. Be stock specific. Try to avoid, the index at the current juncture. Hold that thought, Hemen. We'll come back and speak to you about specific stocks, and also get in your thoughts on what one should be looking at the current juncture in terms of stock recommendations. But let me also bring on board Nirav Karkera, who's the head of research at Fisdom, joining in this morning. I want to first dive into what's happening with Paytm, given the fact that the company has said that it will be curbing its low value personal loans, right, below 50,000 rupees. Of course, this has come after the RBI's clampdown on unsecured lending, right? But it will be offsetting it with by expanding its higher ticket loan portfolio. The company has maintained that there won't be much impact on earnings, in fact any impact on earnings, but brokerages this morning have downgraded the stock. Goldman Sachs has downgraded it. In fact, most of the brokerages have handed out EPS cuts to the tune of 10 to 40%. Do you think the path to profitability now gets pushed back perhaps to FY26?
Hey Nandita, so right off the bat, it's such a pleasure to interact on such exciting topics with you. So yes, about Paytm, it is definitely a trouble. If Paytm cuts down the lower ticket size loan book that it heavily relies on today, while it says that it will offset it with the higher ticket, a loan book that it is having, but it is not going to happen immediately, and it depends on a lot of variables actually playing out. If we look at the history, Paytm has been leaning pretty heavily on the smaller ticket advances, and cutting down or curbing intent over there does not necessarily translate into an expansion of the higher ticket. So on one side we are seeing an immediate commitment to reduce the low ticket size advances, and on the other side we see a hope to expand the higher value ticket sizes, right? So while the former is a definite, the latter is a variable. So on an immediate basis, one can expect its EPS to be impacted negatively. In fact, in the very near term, this will bear really heavy on the earnings, because there is no such visibility on the growth path for expanding the high ticket base at the outset. If there were any visibility there, it would have been different. So yes, it bears negatively, and the path to profitability will definitely extend further into the future unless there is some material development that adds a lot of visibility on how is this expansion of the high ticket base happening.
That was about Paytm, but there are quite a few, stocks in news this morning. I want to get in your thoughts on the sugar stocks. This pack will be in focus as the government has prohibited OMCs from procuring ethanol from sugar firms. Right now, lower diversion for ethanol will help sugar producers in increasing their output, which has been flagging. But this would come as a big setback for sugar companies, right? As the industry has invested billions of dollars in the last 5 years to increase ethanol production capacity, right? So what are your thoughts? Do you think sugar stocks are in for a rude shock in today's session? And we have a query since we are on this topic. I want to take up this query from Mohit Anand Bhatia. He wants to know whether he should be looking at stocks like Bajaj, Hindustan at the current levels. How would you approach the sugar pack now in light of this development?
Right. So the sugar industry has now gone to be a very pseudo sort of a play on renewables and ethanol very specifically, and the diversion into ethanol has been a very meaningful diversion in over the past recent quarters. If you see, most of these diversions have been margin accretive also to sugar companies. You're right that such a clampdown and such a restriction posed on OMCs would leave the sugar companies with more for increasing their core output, but the core output itself is not as lucrative as this diversion was. So, and in fact, most of the run up that we have seen in sugar companies since quite a few quarters now, the consistent run up that we have seen, it was on the back of the money that was being made through the ethanol diversification. In fact, even within the ethanol scheme of things, there was a very lower percentage that was being retained by sugar companies, and a whole lot more was distributed. So the distributed ethanol segment was also adding a good amount of earning support to the sugar companies. So the problem arises because most of such earnings were forecasted and were aggressively priced in to the stocks of sugar companies, and any such development does not really augur well, at least on an immediate basis, because all such pricing in will then have to be reversed to some extent, because we can expect the demand to definitely slow down on the OMC front and the margin to be impacted by that to that extent. So in the near term, there is definitely going to be some pressure on sugar companies. You spoke about Bajaj Hindustan very specifically. In fact, why just Bajaj Hindustan? Let's talk about a few names in the same other line. In the same line, all of them are expected to be under pressure right now. The longer term fundamentals remain in place, especially for Bajaj Hindustan. Now could be a good moment to start buying into it for those believing in its core business, for those expecting the ethanol kicker to keep giving in and keep adding to the growth opportunity. That's where you should be slightly conservative. But if you actually believe that the core output, which Bajaj Hindustan has been delivering upon fairly well, if you look at the past couple of quarters and slightly beyond, also the trend has been uh, reassuring, to say the least, right? So such correction takes off some froth away from a valuation standpoint. So one could definitely conservatively start looking at building exposure if the core business is what you're after in your investment thesis.
Right, that's the view on the entire sugar pack and of course particularly for Bajaj Hindustan. Mohit, hope that answers your query. But last question to you, with respect to Realty, of course Realty index has, outperformed all the other sectors, gained somewhere around 70% on a YTD basis. But much of the euphoria in these stocks is led by the luxury real estate segment, right? But commercial real estate, if you see, because of the startup funding winter, it has been under pressure, and it says a different tale altogether. But do you think the fact that, of course, there are a slew of launches lined up in the next year, given the fact that inventories are low and demand remains high when it comes to luxury real estate, right? But the fact that, much of that return of capital gets utilized in expansion rather than distribution to shareholders, do you think that makes investment into the sector a little unappealing?
So the sector has definitely yielded some stellar returns after a very long dry spell, and it is good that the sector finally came about. But you should look at it from three perspectives, like you rightly said. One is the luxury segment. Second is the affordable residential segment, and the third would be the commercial real estate segment. So on one end of the spectrum, we have the commercial real estate that is really, really struggling. It's not just because of the start of winter, but also the mixed, hybrid working from office sort of policy, and also the number of new establishments that are trying to acquire more land space, right? That is very limited. The growth is slightly limited there. So commercial real estate remains under pressure. At the same time, luxury real estate is looking really good because there are quite a number of launches, and we are expecting a whole lot more launches to come in. The inventory is slightly low here, and the sales turnover is looking slightly appealing. But like you rightly said, most of it is being reinvested into acquiring newer lands and building the roadmap and the pipeline towards newer launches. So you see, most of the run up that we are seeing in the realty segment is linked heavily to the luxury estate project launches per se, and not as much on the entire conversion cycle. So while projects are being launched, we are yet to see how well and effectively does it translate into top line and then finally bottom line, which also highlights a point on, will there be money that will finally be delivered to shareholders in the form of earnings or bottom line per se. That is yet to be seen. It is slightly skeptical at this point in time, looking at where we are in the interest rate cycle, and considering EMI dependent population and the target group for affordable housing. That segment has not yet picked steam. However, as interest rate reversal starts kicking in and affordability starts going up, we expect some more steam to come up there. So when you look at it from an aggregate level, inventory is actually not very low. If I'm not wrong, it should have crossed ballpark of around a lakh crore. That's something that that was published very recently, right? So at an aggregate level, inventory levels are not very low. It is just the luxury segment where that is happening. So right now, it makes sense to be cautious and to see how the sales conversions are actually happening and how is the sales conversion actually reflecting in the bottom line. So, net of all the reinvestment and the actual realizations is what will define the growth path ahead. So right now, a lot of it is about aggressively pricing in margin accretive launches being fully sold out, inventories being fully sold out, and all such margins being realized and value being realized in the bottom line. So that is being priced in aggressively. I feel it is time to take a breather and see how things pan out, at least over the next 1 or 2 quarters, to get a fair sense of how most of this is happening, because most such data will come in through the year end, where major projects numbers will be reported. We are expecting it to be reported through the year end. That should offer a whole lot more clarity. And if that's good, then you'll always have an opportunity to get back in.
All right, that's the view then. Wait it out for a couple of quarters before investments into the real estate sector. But Nirav, always a pleasure chatting with you on diverse topics, as you mentioned, and your thoughts and your take on various sectors. Pretty good. Look forward to having another conversation with you pretty soon.
Thank you.
Thanks a lot. Well, with that, let's go back to Hemen then. Hemen, lots of queries coming in from the banking pack on our feed. But since the stock of the day is also, one of the banking stocks, I thought perhaps we should take everything together. So the stock of the day for me should be the IDFC First Bank shares, because, sources suggest that Warburg Pincus is likely to sell somewhere around 1.3% stake via a block deal. And, the floor price has been set at 85 rupees 70 paise per share, which is just about 5 rupees discount to current price. Looking at the shares of IDFC First Bank, and given the fact that private banks have started participating over the last 5 sessions, it has seen a good 6% up move, and we've also seen participation from the likes of ICICI Bank, HDFC Bank now. Plus, a lot of queries coming in, as I mentioned. We have queries on SBI as well coming in, because this particular stock, if you look at it from a YTD perspective, hasn't really fired, right? So within all these private names and the largest public sector bank, what is it that's catching your attention on the charts now?
Well, I think, we would expect Kotak and HDFC to play catch up. Kotak has to some extent, but the leader, and frankly speaking, first time in probably 20 years, these two leaders have been a little bit on the back foot. And this time the leadership baton has been passed on to ICICI Bank, Axis Bank. And we very rightly pointed out, State Bank has been unusually docile. We haven't posted a fresh all-time high. Many of the stocks have done well, no doubt. But I am sure State Bank isn't going to hang around for too long. It is setting the stage for a catch-up. We're currently at 608, Nandita. Historically, listed history, State Bank has never closed above 620 on the weekly chart ever. Now, we've made 1, 2, 3, 4, 5, 6, 7, 8. We made 8 attempts over the last 1 year at overcoming 620. We haven't been able to. But this time, I think the setup seems clearly positive. But yes, it's like the difference between the cup and the lip. We need a closing of 620. I believe that should happen probably this week, if not the next. 620 above, I think it will play catch up. So, the stocks that you mentioned, I think, I believe State Bank offers maximum technical value. I would say that because Bank Nifty is on a roll. Many of the stocks, private sector banks have made new highs. State Bank hasn't. So I say technically it is cheap. Above 620, I wouldn't be surprised if we see a 7 to 8%, maybe even a 10% upside in State Bank. So yes, I think a lot of the banks are still good, not a problem. I'd pick State Bank.
All right. About the Adani group of stocks, these stocks have been on tearaway rally. So we've got a few queries coming in as to whether or not it's time to book profits. Aniket wants to know your thoughts on this, and even Naveen wants to know whether it's actually a good time to enter into some of these stocks. So two divergent questions coming in, whether to enter or not, and secondly, whether to book profits or not. What would you suggest?
Okay, that's a Hobson's choice, Nandita. But yes, I think phenomenal move. Logic says that the law of gravity should catch up with most of them. Somewhere we've seen an intraday cool-off coming in. Most of the stocks have ended slightly negative after being positive yesterday. So one, if you are, once again, firstly, FNO stocks are Adani Enterprise or Adani Port. If you are an FNO holder, please be very cautious because these are high beta stocks. They move either side in a very extreme manner. So that's the first thing. But if you are not in a rush and if it's not an FNO position, I think you do not need to exit most of the stocks. I mean, uh, FNO stocks are port and enterprise because one gets the feeling that it's not yet over. We've seen a crazy move. Yeah, we are seeing a cool off coming in, but after that cool off, I'm not saying the momentum will continue in the same vein, but they look positive. So I don't. Okay, firstly, there is no intention or any idea about shorting the stocks, but I would wait comfortably. I don't see any problems. Yes, there could be a period of consolidation. So, and this is for the person who's holding the position. You want to book some profit, there is absolutely no harm in taking some money home. And after such a move, it's welcome. But let's say you have 100 stocks, I'd say sell one third, keep the two third. The setup, the momentum still seems to be positive and promising. To somebody who doesn't have a position, I'd say yes, selectively one can go long. Uh, I don't think it's possible to catch the top or the bottom in such a scenario. Spread your purchases. The ones which you like the most fundamentally is the ones you should go for. I think Ambuja looks good, Adani Ports looks good. So buy it in something like an SIP. But yes, they are worth buying. I believe there is headroom left for an upside. So I wouldn't go the whole hog at one attempt, but I would spread my purchases. Nandita.
All right, that's the view. Hope that answers your queries. But let's take up a query on the chemical pack now. Yesterday we saw Balaji Amines, Alkyl Amines. I mean, great rally coming in there. But these stocks haven't really moved. If you look at the long-term charts, Tata Chemical was one of them that saw a good up move coming in. Praveen wants to know your thoughts on Tata Chemicals now. Do you think on the charts there are some signs of reversal now? Do you think chemical stocks warrant a look?
Well, yes, Balaji Amines would have been an easier question, Nandita. But yes, I think you look at Balaji Amines, you look at Deepak Nitrite, you look at GNFC, GSFC, Rosary Biotech, Lakshmi Chemicals. There has been sparks in many of these chemical stocks after some time. So, and coming back to Tata Chemicals, we've been range bound for a long time. I believe it's been a year or more. We've gone nowhere. Whatever technical positives that we are seeing as of now are restricted to the short-term charts. I believe they most probably would get converted to medium-term charts, but for that to happen, we're at 1011.90, 1044, 1044 and 1078, two levels one needs to keep an eye on. Above these levels, things start looking up from a medium-term point of view. So most of the chemical stocks have shown sparks of life after quite some time. Balaji shot through the roof. But if I look at the weekly and the longer term setup, I believe after a small cool off, this is the beginning of a move. We need some confirmations because we are on a Thursday. We need a weekly close to see whether some of these stocks sustain their levels. There is a lot of promise after some time, and many of them look like moving up. Nandita.
Right, that's the view on the chemicals space. But quickly trying to squeeze in as many queries as I can. Bikram Murmu wants to know that your thoughts on the fertilizer stocks. RCF, Madras Fertilizer. Fact, these stocks were on a tear yesterday. I think RCF Fact they gained in excess of 10% or so yesterday. Any stock that you like here? RCF Fact, National Fertilizer. Madras Fertilizer, anything that is, poised for a good up move from here?
Well, frankly speaking, all of them are in short, medium, long-term uptrends, Nandita. So whatever time frame you look at, and something like a fact is, it's been a dream move, frankly speaking. For ages, haven't done anything, and now suddenly it wakes up and catches up on lost time. RCF that you mentioned looks very interesting because the other stocks you mentioned are good. I distinctly believe that fact is moving towards four figures. But the one I would look at is RCF because 150 was the all-time high posted some 15, 16 years ago, Nandita. And now the stock is taking that out. Now, okay, not fair to compare. I mean, but when PFC REC took out 10-year highs, I mean, they went berserk. But once again, not fair to compare stocks. But we are taking out a 15-year high. I think that's on technical parameter, very significant move. So RCF looks good. We are breaking out fresh. Looks quite positive.
Right, RCF looking more interesting in the fertilizer space. That wraps up our query segment for today. But before I come to your picks, Hemen, what would you do with an HAL? Yesterday we saw a very good up move coming in, and of course after the state poll results, all these PSU stocks are once again in focus. We are there are questions as to whether or not there could be a fresh up move when it comes to the PSU stocks because of policy continuity, right? So. A renewed rally in stocks like HAL, BDL, BEL, would you say that that is possible, at least for the long term?
I think so. But many of these stocks, the orders, and they're amazing. But frankly speaking, some of these will take time to get executed. So you'd have a very thick order book. But the execution and the reality and its impact on the balance sheet, I believe there would be some. But yes, currently, a lot of momentum. Even if you're speaking about HAL, if we are at 2,700, I believe we are heading towards 3,000. Lot of momentum, and frankly speaking, higher tops, higher bottoms, no negative divergences, no reversals, no important level breaking on the downside. Safely ensconced in an uptrend, and I believe they are it looks set to continue further, Nandita.
All right, that's the call on the defense pack. But with that, we've come to the end of the query segment and the show as well. But before I let you go, Hemen, what are you recommending for our viewers this morning?
GAIL, it's been a multi-year breakout, looks very promising. So one can buy a gas authority at 139, stop loss 134, target 149. The second one, a recommendation is on Hindustan Copper. It's a short-term recommendation, but the long-term charts are a dream. I believe this stock could give you a 50% return over the next year or year and a half. Looks simply great, but yeah, currently I have a short-term view. One can buy Hindustan Copper at 180, stop loss at 170, target of 200. It's a trading call, but I also have a longer-term investment call. Nandita.
All right, GAIL and Hindustan Copper, two recommendations coming in from Hemen. With that, Hemen, always a pleasure getting you on the show and, understanding your thoughts on sectors as well as stocks. But with that, we've come to the end of this edition of Morning Trade. Of course, we will be watching out for the market open, given the fact that, we could look at that 21,000 peak on the Nifty today itself. But with that, it's a wrap on this edition of Morning Trade. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.